Hello, everyone. Jesse Webb, Traders Pro. Market conditions remaining mildly bearish. We've been really stuck in this sideways consolidation now for several weeks, and we'll take a look at some of these shorter term patterns. Stuck right in the middle, really across everything right here, and really nothing overly bullish or bearish at this point. The buy-sell ratio is showing still some signs of weakness. When we're seeing that red above green, that means that bears are in control. But in this case, we're just not seeing aggressive selling. We're just not seeing any real confirmation to the upside. We're sitting right at a resistance area, pretty significant one for the overall market. We'll take a look at that chart here in just a second. The sentiment also bounced pretty hard off of that bottom a few months ago, or 1 month ago or so. It looks like in August 18th was that low, bounced up to this mid-level, and now just pausing inside that range. We're also seeing some of that confirmation on breadth here with the Dow at six buys and 7 sells, and then 16 in the middle. So, buy-sell ratio is right around that 1 area, and so just showing some indecision in the overall market. We are seeing a little bit more weakness, though, in some of the other indices. 42.23. We're seeing these buy-sell ratios down to 0.5. So we want to ideally see that at 1 or higher for a healthy uptrend, and we're just not seeing that right now. So that certainly means, be cautious out there. If we take a look at SPY, you can see that overall pattern here. We bounced off of these lows. We've talked about those several weeks ago, and now this is our trend profile. When I say that when we get a lot of color like this, it's just an indecision. Typically, you're in the hold range, short-term trend down, long-term trend up with a hold signal, and that we've got these support areas right here. So we'll see if the market holds up at this area and can continue towards that and possibly test that upper range on S&P 500. We are back up above that momentum zone here. If I just plug those back in, make that change like this, up above that 236 momentum zone of this prior trend. And so some strength, but just not a lot of confirmation yet. And we'll see what the market is ultimately waiting for and which direction we end up running on this. Some of the stocks to consider today, really the overall new buy list didn't look overly compelling. There was a couple. MDGL showed up here. I like to see on that 6-month chart it going up this other direction, but it was the 1-year chart that really popped this thing higher and put it up into that upper strength rank. So it's had a pretty nasty pullback, but potentially moving higher. So that 1-year chart looks a little bit more compelling than that 6-month chart. HNRG, which is a coal stock, also looking good right here. Moving back up into that buy zone, a bounce around that 236, that upper quarter, and we'll see if basic materials end up taking off here at all. Medical stocks and medical products, BRBR is also in that top 5 today. OLED, don't know exactly what they do. Obviously, when we're going through these stocks, a lot of times this is kind of step number 1 where we're looking and saying, okay, we have this overall trend profile. It looks good. It's showing up in the scan. It's got a high rank. Okay, what do they do? Then you can dig in and find out a little bit more if that's an industry or something that may be of interest. Let's look at a couple others here. SGML. Really kind of the same story there. EVR, I like these type of formations lots better when we have this connecting this swing low and swing high, and we're in the upper range of this box and we're moving this direction. An interesting price pattern on that stock. Let's see if we've got any ETFs here that are interesting. Man, that sugarcane, that still keeps showing up here. It's had a pretty nice run here over the last few months. And any of the new buys here, we can sometimes get an indication of what's happening on these overall sectors. We're still seeing real estate, this real estate bear ETF. This means that if real estate is dropping, the real estate sector is dropping, this is going to increase by 3%. So if it goes down by 1%, this will go up by 3%. It's a way to hedge your portfolio to be able to be long something that will profit when it's going down versus actually shorting or owning put options or anything like that. There's no time decay or anything on these. So typically a way to hedge, I wouldn't hold them for any length of time, longer than a few months tops, in terms of just using it for a shorter term trade or a hedge on an overall portfolio. So keep an eye on, remember that the muscle ETFs are an effective way to look for current trends, and also a way to be able to find maybe an idea on an ETF that you didn't realize existed, because there really are a lot that show up in those overall scans. That'll do it for today's update. Everyone have a fantastic day today.